everybody, happy Sunday and welcome to episode 9 of the Stock Trading Pit. Today's agenda consists of 4 segments as always, with segment 1 being Talking with Traders. Dan interviews Jack, aka Alphacharts365 on Twitter, how he got started in the markets, what he uses to analyze the markets, and how he trades. Segment 2 is the broad market recap as always. Segment 3 is going to be the watch list, and that's something that I go over with Rob Smith, the founder of TheStrat. We're going over 5 different monthly charts into the rest of the month of March. Segment 4 is going to be the weekend chart request as always. So sit back, relax, and let's get started.
Hey everybody, Dan Ushman here, and this is another episode of Talking with Traders. Today I've got a really cool trader to talk to, Jack Thatcher, or as you know him on Twitter, Alphacharts365. Jack, thanks for being here.
Hey, thanks for having me here, Dan.
I really appreciate it. I love your work. You post some really clean charts. They're simple and easy to read. So let's jump in. First question for you: how'd you get your start in trading? What brought you here?
So the first little piece was actually back in 6th grade. We did one of those, look at the newspaper and stock trading competitions, and I randomly picked a stock. It happened to do very well. It was I don't even know what it was. And I really didn't get back to it, but it was always on my mind until after I graduated college, and then wanted to make some more money, obviously, and the stock market really intrigued me, and so many people say that it's a random walk and no one can pick stocks, and that was actually the impetus, was that a family member told me that. And I'm like, well, I don't think that's true. I think that there are, things you could do to put the odds in your favor. And so then I started along my journey and I'm here today.
Did you, go through like a period of time where you lost a lot when you first started, or, tell us about the early days when you first, placed your first trades?
Yeah. I mean, so the early days, I kind of, I tried everything, right? As most traders do in the beginning. I looked at fundamental analysis. I really couldn't find an edge, lost a little bit of money with that. I found technical analysis, which really appealed to me. The idea of a chart is a visual representation of supply and demand. It just really resonated. That was amazing. And so then, I'm looking at tons of charts and I'm trying a bunch of different indicators, and usually having 5, 6, 7, 8, up to 10 indicators, trying to get them all to align, like I think most people do. And it never really, that obviously didn't work. And I really didn't start to really do well until I started removing indicators and get to where I'm at now. As far as where I started, I was lucky because my wife only let me have a few $1,000s to trade. And so that was perfect, actually. That was the right way to do it. So I lost all that. But I tried all different things, all different ways to do it. And I tried options, but keeping it real small. So you're going through the motions, but you're not really hurting yourself too bad.
I think that is an experience shared by many people who get into trading. I had like 10 indicators too.
Yeah.
And I didn't actually know what any of them did or how they worked, right? So, you're looking for correlations that don't really exist.
Absolutely.
Do you have any indicators that you keep on your charts now?
Price is the one indicator. I mean, price is the primary indicator. Most indicators are based off of price anyway. Price and volume. I will look at MACD and RSI occasionally, but not on a regular basis. You'll almost never see me post a MACD or RSI chart because I really don't use them in any real way. The signals sometimes are not great in my opinion.
Got it.
Yeah.
Do you trade equities, or are you more into options?
Yeah, so I've tried options and I'm horrible at options. I don't know, it just doesn't.
Me too, man.
Yeah, it's hard. So I just do equities at this point because I make money in equities. I lose money in options. So I'll go with what I make money in, so I just like the equities, and it's been fun.
Yeah, I think options, you have to be right about timing and direction. It's hard to be right about just one of those, right?
And the worst is when you're right about the move, but you're wrong about the time. And that by far, I couldn't handle. Like that was like, are you kidding me? The week
That'd be
after
painful.
options expiration, then it moves, right?
Yeah. Yeah. So I'm curious, do you tend to day trade or swing trade? How long do you stay in your positions?
So I've tried day trading. It really didn't fit my personality, and I think trading is very personal. So you really it has to fit you. And it was fast. I was tied to my computer too often, and I want to use trading as to be part of my life, not become my life. So
Good saying.
so yeah, it was too much, and I position trade kind of in my longer term accounts, my retirement type accounts. So I do position trading there. So I'm using what I most of the time post on Twitter is going to be swing trades. I can be in a trade anywhere from hopefully weeks to months in there, and I kind of so the way that I do it is I will go ahead and after I take a position, I put in my sell orders immediately at specific levels. It's usually about
Okay.
8% and 20%. So I'll sell a third at 8%, another third at 20%. And the first third is basically more of a risk management piece because if the thing reverses on me and it hits my stop, I pretty much break even on the trade. The second one is at 20%. I now have a 1/3 left, and that's kind of my position. I'll do kind of a position trade on that and let it ride as long as possible on that one. So that's kind of how I do that. The other piece, and to fight FOMO, I think one of the things I've built into that the way I do it is that I'm always kind of selling something, so I always have a little bit of money to buy the next thing that is setting up that I have my eye on. So I'm always having, it kind of gets me out of the FOMO trap, for lack of a better term.
Okay. That makes sense. FOMO
Yeah.
kills people. It's crazy.
Yeah, we've been there, man. It's hard. It's hard. It plays on your emotions. You want to be in there. You look at Twitter, and it's like everybody's winning, and you're in your trades.
I always thought that was funny. Nobody ever posts their losses to Twitter.
Yeah.
But in other communities like Wall Street Bets, it's almost a badge of honor to post your losses, right? I think they call it like loss porn, which I thought was interesting. It's it seems like the world kind of needs more loss porn. So,
yeah, I agree. Makes it real.
Yeah. So, any stocks or sectors that you're kind of looking at, this week, next month? What's on your mind right now?
Yeah. So there's been a couple places that have been really interesting. I think that the reopening stuff is just starting to work. I think we're going to see a lot more of that in outperform. I think the market. Some of the airlines like American Airlines or Southwest. I think the cruise ships, Royal Caribbean and Carnival Cruise. I bought some Carnival yesterday. Actually, I like the spot it's at right now.
Okay.
Yeah, I think we're going to see a lot more of that, especially once they start, announcing that they're booking for sailings or they have a date where they're going to start sailing for shore. I think that's, and technically they're in uptrends. They're kind of they just kind of broke out, consolidating in a really neat area. So I like those a lot.
Okay.
Some of the miners. Go ahead.
Oh, sorry. Go ahead.
No, you first. Go ahead.
So I was going to ask, do you tend to buy breakouts or pullbacks? Because you said they just broke out. I'm curious.
Yeah, so I
like your entry.
I like things in uptrends. So
Okay.
I like all my filters and all my screens that I do. It's always like that's for sure. I'm not buying things near the bottom. I'm buying things in uptrends. They have to be above all their key moving averages. 20, 50, 200.
Okay.
So yeah, so that's non-negotiable as far as that goes. And I think, so let's talk universe of stocks, right? Because I think if we fish in the right pond, I think we're more likely to catch a fish. And
Okay.
so, I look for really two different things in my universe of stocks. I'm looking for growth names, IBD-ish type names, with setting up with the good fundamentals and the good technicals, growth companies. We all know the names, and That's one scan which has been very successful for me. But the other one that I'm just working on is one that's showing where the institutions are starting to place their bets and put the money. So institutional support. And I think that's an interesting one too, because I think that we all know institutions run the market, right? So knowing that, if we could just piggyback on the back of where they're going to, I think that the chance of some success is puts the probabilities in our corner. So that's kind of how I'm looking at. As far as I'm looking for breakouts for the most part.
Okay.
I'll front run it sometimes in good markets. I don't mind, because a lot of times, if you try to catch the breakout, but it moves 8, 9, 10%, well, you kind of missed it at that point. So in good markets, I'll front run that breakout too.
How do you manage risk? Do you use like a fixed stop, a hard stop, or do you kind of play it by ear?
Yeah, so I use 2 closes below the 23-day moving average. That's my initial stop right there. So again, they have to be in a consolidation. So usually prices within 6 to 8% of the 23-day EMA on most of the things that I'm buying. And if it closes 2 closes below there, I'm out. I was wrong. One thing I've learned last year was even when you're wrong, you may still be right in the future. So don't be afraid to re-enter a trade. That was a big lesson for me to learn.
A lot of people are afraid to do that, and they start to hold grudges against stocks. I always find that to be interesting. It's like, I'll never trade that name again.
Yeah, I only have one name on that list actually.
What name
this
is
was
that?
my biggest loss. JC Penney.
Okay.
Killed me.
Are they
Back when I
still
was
around?
learning, it was in a downtrend. I just, it was terrible, and it was I took a 50% haircut in my trading account on that one. So that was
brutal.
that left scars. But I was trading small. Luckily at the time, I learned.
How do you think about position sizing then? Because losing half your account in one trade means you're really oversized in it.
For sure. Yeah. So the way I position size today is no position is more than 15% of my account.
Okay.
And I buy all one shot. I don't layer in or anything like that. I buy in one shot. 15% is my initial buy, up to 50%, 15%, and then like I said, I sell on the way up. So I'm decreasing that position as the price is going up. So usually, if I'm in little ride shares, it's anywhere from 6 to 10% of my account, depending on how far it's moved already.
Okay. Do you set like a loss at like, what's your max loss per trade?
So I try to keep it no more than 8%. I prefer it closer to 6%.
Got it.
Yeah.
Okay. All right, cool. So I'm curious, what do you think the biggest mistake a new trader makes?
So I think biggest mistake is probably not using real money. If I had to say one mistake is not using a real paper trading.
Okay.
Keeping it really
Why?
small is important. Go ahead.
I was asking why.
Because you don't get in tune with the emotions. You say, "Oh, I'd buy here and sell there," but when it's your money on the line, would you really do that? Because it's easy to go back and be and Monday morning quarterback the trade. But when you actually have money, you have to make the decision. Do I sell it? Do I take my stop here? Do I lose a little bit of money? Or, what do I do in this situation? It takes, I think, and for me at least, it took years to figure that out. And the sooner you start with real money and you start really understanding who you are as a trader and start managing those emotions, I think the sooner you become successful in trading.
Okay. That's
So
good
so
advice.
paper trading is, I think, and I paper traded for a while too. Didn't help me at all.
Do you think it's because just there's no emotion in paper trading?
Yeah, that's exactly right. There's no emotion in paper trading. It's I don't want to say it's too easy, but again, we Monday morning quarterback. Oh yeah, I would have done this. That doesn't happen. Trading is so personal. You know what I'm saying? It's such a personal thing that that if you don't know who you are, then it's going to be really hard.
I would have to agree. I paper traded when I first started, trying to be more serious about trading, and it led to disaster.
Yeah.
I don't even like to talk about it. So it's, something that gives you false confidence, right?
Yeah, exactly.
Yeah.
But again, but listen, there's nothing wrong with keeping it real small when you to really trade, because the emotion's there, even if it's 3 shares, if it's 3 shares of a company, it doesn't matter. It's still the emotion of making the decisions and everything else.
Yeah.
Yeah, I think
It's interesting if you think about it, because if you remove the emotions, you're essentially paper trading, right? Like it's emotion free, it's easy, right? But it just never works that way.
No. Even with a great system, right? Even with an amazing system that's okay, I'm going to do this at this point, and with alerts and everything else, still not so cut and dry. There's still gray areas in there.
Completely agree.
I think.
Well,
go ahead.
Yeah, I was going to say thank you for being here. We're running out of time, so I'm about
Gotcha.
to get yelled at.
I gotcha. Sorry about
but
that.
I appreciate you being on. For those watching, you can find Jack on Twitter. His handle is Alphacharts365. We'll put a link to that and his YouTube channel in the description below. Thank you for being here again, man.
Dan, it's been great. Thanks for having me. Appreciate it.
Definitely.
Alrighty, let's look at the broad market charts, and what a week it was. And not even really in the broad markets, it was more individual names that had these absolute beatings. So we'll go over that a little more in the chart request section segment. But to start with the broad markets, let's look at some of the charts. SPY, QQQ. We're going to look at Bitcoin this week because Bitcoin has been a pretty good indicator of liquidity, which it didn't get that hit. Which makes me think that this may be over. We'll have to see. I don't, my opinion doesn't matter. We'll have to see what the charts are telling us. But all in all, SPY, we've got a lot of things to talk about. On the daily candle, if we anchor the volume by price from this October 30th low here, you can see that we have this area here right around 372 up to 378, which was a volume gap. This shows that there was not a lot of shares holding here, which allowed us to drop very quickly because there wasn't a lot of people going back to break even until we got way down to 372. And that's exactly where we bounced off of. We bounced a little above this broadening formation resistance. So that's something to keep in mind on the volume by price side of things. But if you look at the gaps, we talked about this gap below last week, and you can see using the gap snake here on TrendSpider, we did finally fill that gap, which I think is very healthy. You want these gaps to fill really to have confidence in the move up going forward. So the fact that we did fill this gap, definitely a nice thing to see. On the weekly side of things, you can see here that this anchored VWAP from this last candle that tested pretty much from this low from the elections, we bounced right off this anchored VWAP, which has acted as a level of interest or around that area multiple times in the third week of December, and then as well as the end of January. We barely missed it. And then this week, we actually tagged it perfectly. So a nice bounce off that level. We do have this solid candle here, which tells us that the open was lower than the close. And so you can see that, even though we did close above last week's close, you can see that we did actually still close as a red volume bar because technically the close was lower than the open. So keep that in mind. Anytime we have 3 red volume bars in a row, notice that generally 3 red volume bars is the max here on S&P 500, unless you're looking at COVID and we had literally 5 red weeks in a row. But all in all, we bounced where we needed to bounce. Let's see what happens going into the week ahead. A pretty strong candle here for Friday. Now, going into the Qs have just been absolutely destroyed. Not as strong as SPY has held because we've had a lot of rotation. Some of these airlines and some of these other stocks that have been rotated into have helped the S&P 500 actually hold pretty well. Whereas the Qs, they were just destroyed over the last, 3 weeks. We've moved all the way down over 10% in the last less than 3 weeks, 2 weeks and 3 days. You can see that we may finally be getting close to at least a short-term bottom here. Earlier in the week, we did have this bear flag, which did really materialize nicely. We have this gap below here that also filled, which is also important. And you can see here that from the October 30th low, there's no more gaps below. We do have this gap below at around 376 to 276 to 282. But this is an area that easily could fill. But these gaps, at least the initial gap up like this, generally you don't always see fill. Now that doesn't mean that it can't fill, because if we look at something like DIA, you'll see here that in this one, we still have this gap below, and we still have quite a few gaps below. We have a gap below from around 303 to 304. We have a gap below from around 284 to 289. And then we have this initial gap up from the lows, which is around 270. So, there's definitely still gaps below on DIA, IWM as well. If you look at DIA, we were talking about this broadening formation here, and you can see that we really tested this level below almost perfectly. So I did want to mention just quickly that the gaps on DIA are still very much open below. We did fill the gaps in SPY, the Qs. So the last thing I want to touch on here on the Qs is the fact that on the weekly side of things, we did continue down from that longer term breakdown. If we anchor the VWAP from the same candle from pretty much the election lows, or pre-election lows, you can see that we closed right at this anchored VWAP as well. So the Qs, really nice follow through on this bear flag, and then we did have a nice bounce on Friday. Gaps filled, but on DIA, we do have that gap below. That is something to keep in mind, and we do have multiple gaps below. On IWM, we also have these gaps below as well. We have quite a few of them. We have one around 197 to 199. We have another one around 178 to 179. I mean, IWM has a lot of gaps below. It's kind of like Swiss cheese here. However, if we anchor the volume by price from this September low, which is really our kind of capitulation low, we bounced exactly where we needed to bounce, right off this volume shelf here, right around 214 down to 208. You can see here I'm highlighting it in green. Just, supply dried up here, and we were able to get a bounce. On the weekly side of things, we did break down through the support zone. It didn't really act as support, so we can't really call it support, but it was previous support, not necessarily support this week. We did close below it, so something to keep in mind. But still, 3 red weeks in a row doesn't happen a lot unless you have some type of COVID move down like we saw last March. So 3 red weeks, do we get some type of bounce to the upside after some pretty heavy selling pressure? We'll have to see. Now let's look at Bitcoin. I did mention that we're going to touch on Bitcoin as well, daily versus weekly. On the daily side of things, you can see here from the swing low in late January, or mid to late January on the 21st, you can see that since this point in time, a majority of shares, including the point of control here, is really acting as a beautiful level of support. Remember, this is an area where a majority of shares are holding at break even. So the price is able to really catch a bid here, not necessarily because buyers are stepping in, because everybody's holding at break even here. All supply needs to do is dry up, and we get a bounce here, not necessarily because of the buying side. On the weekly side of things, not really much to look at other than the fact that we barely missed this 5.618 extension here from the 2019 down to the 2020. So 2019 highs to the 2020 lows. This is our measured move. Here's our 1, here's our 0. And you can see all of these extensions have actually been pretty important. The 1.618 extension here on Bitcoin was important back in late November. You can see that we tested this area multiple times before breaking out. You can see the 2.618 and the 3.618 were both resistance and support in early January. And then once we finally broke out that 3.618, let's add the 4.618 just to add it. 4.618. And you'll see the 4.618 hasn't really done much. It's kind of arbitrary here. But the 5.618, we barely missed it. I'm just going to take the 4.618 because it's a little noisy at the moment. You can see a little clearer here that we did really only miss the 5.618 extension by maybe $1,000, which is not a lot on Bitcoin, maybe 2% or so. So you can see here, this is kind of your poster child of examples here where you use sensitivity alerts around these zones. You right click, create an alert at this line, and then you create a zone around this area. Now, in this case, you can see if you would have had this sensitivity alert, you would have actually been alerted when the price got anywhere within this purple area. And you would have been able to say, okay, whenever the 4-hour candle closes in this purple area, alert me. And you would have been alerted and not have to be alerted right when the price gets exactly to this $60,030 mark, which is the 5.618 extension. So, so maybe it is a little more than 2%. I guess I was looking at 59,000, but the actual number here is 60,030. So Bitcoin, you know, if there was really a liquidity issue in the market, I think you'd see it in Bitcoin, since it has been kind of a sign of how liquid the markets are. And since Bitcoin's held pretty well, that's definitely something to keep in mind for the broad markets. Now, the last thing that I'll mention here, and I think this is important as well, you know, VIX has been pretty tame. I mean, we didn't even hit the same highs on VIX that we did in late January. And the last few weeks have been a lot more brutal than late January. So the fact that VIX really wasn't able to catch any type of real move tells me that this move may have been, you know, not as long lasting as maybe what a lot of people think. So obviously, the VIX is more of a function of the S&P 500 rather than the Qs, and the Qs are the ones that really just got destroyed in most of growth stocks in general. So keep this in mind, that the VIX really was pretty tame over the last week or two, didn't get anywhere close to these late January highs. And then you can see here, we do have this rounded bottom on VIX, but remember, VIX is not something that we can really accurately chart, but it is something to keep in mind that we do have this kind of rounded bottom forming. I wouldn't look too deep into that. We still have this gap below down to around 18, which who knows when that's finally going to fill, but maybe it will fill in the next couple months if the market can really get some steam ahead. So this is the broad market update. We'll look at some more charts in the chart request segment, but for now, hopefully this was good information to get an idea of how the markets look into next week. Let's move on to the next segment. Alrighty, let's look at some monthly charts, strat style. Rob Smith is here with us, founder and just creator of TheStrat. Rob, thank you for joining us. And it is still a little early in the month, so can you explain to everyone, you know, why are we looking at the monthly charts at this point, and what are we really looking for on the charts?
Okay, so well, thanks for having me, Jake. Good to be here. I always like to spend time with you and talking strat for sure. Well, one of the important things about monthly charts right out the chute is if you can get a break, right, a reversal or a break early in the month, because those signals are good all month. A monthly signal is good all month, which means you can continue to look at the shorter term time frames to look for setups that reconfirm that break. So what we're always doing is we're looking for, first of all, is there a concentration of breaks? And that'll tell us where the market's going on the monthly basis. And then once you have it, those breaks, we can see how many of them are and call it a simultaneous break like we had today. And we got very fortunate today because we're looking at stuff like that. And if you look at the QQQ, you're going to notice a lot of NASDAQ stocks did exactly what I'm going to show you here today.
I love it. I love it. And yeah, definitely something I want to mention, that we are at the we are showing these strat setups here on the chart. So this is something on TrendSpider that if you are still maybe learning the strat, or even if you are someone that uses the strat a lot and you just want to have a quick glance at what these setups are, you can see all of these candles are numbered either 1, 2 up, 3, 2 down, or 3. So we do have that set up. So I know you are the master at the strat, so these numbers probably don't really matter too much to you. But for those that are watching, this is a good visual for you guys to see this play out with the numbering. So INVAX is the first one that we're going to look at. What are we looking at here, Rob?
Okay, what you're seeing here is a 2 up, 2 down reversal. And when I first started working with Dan, he's like, that happens a lot. And I'm like, it does. And one of the reasons that's important is because it helps you gauge magnitude, right? And in this case, this would be big magnitude if it can pull it off. And it might not do it in 1 month, it might be a series of months. But what I mean by that is that anybody who hasn't heard me speak before, I talk about broadening formations a lot because that's how price discovery works. So it's a phenomenon. It's not necessarily a pattern. People are oftentimes trying to draw the pattern, draw the inverted triangle, broadening formation. I'm like, you don't have to do that. We know that phenomenon exists because an outside bar exists. And what I mean by that is a broadening formation, by definition, takes out both sides of a previous range, correct? Correct.
Yep.
So we know that that phenomenon exists. So when you have this 2 up, 2 down reversal, what we're looking for is that 2 down to take out the previous 2 up, where these 2 months last that one. And so these 2 months right here, nope, going right where we are right now, the top one,
Sorry.
the top one and the present one, that present 2 down, it should take out that 2 up, that previous one, and become a compound outside bar. Those 2 months would, if it was a 2-month chart, would be outside of that. That's big magnitude. So,
Got it.
yeah, right. And then and this happens a lot. And so that's, and then that would be your sub broadening formation of it. So
would this be the broadening formation here that you're looking at? This type of
there's many of them, yes, because you're also going to see a 3. There you go. And so hopefully you can go down and take that whole thing out, which would be really nice, right? Because they've got vaccines, all the news is good, but it's going down, right? That's something I'd want to know about. And so our trigger is as soon as it breaks the low of the 2 up, right? So NVEX today, it broke it. Let's see, where's my mouse? That low is 212.77. It's already down to 183.61, right? So, and it's only the 3rd. So it came out gangbusters. And so another thing you want to do when you're looking at stuff like this is always, if something works, what will that create, right? What will happen if this works? And so if you can go to a weekly chart for just a second.
Yep.
You see it did it on the week. We already knew about that up there. And so if that works, it sets up the 2-2 reversal month. So at that point on the weekly, you're already in from 283, right? Then you can add when it hits that month because you've already got plenty of their money on them, right?
Interesting. So yeah, you almost have this candle 2 weeks ago looking like the monthly candle that's forming right now.
Right, exactly. And then the bottom fell out. And then you have the NASDAQ helping you by falling apart, right? Because one of the things you want to do when you get to the end of a month is I want to look and see, are we closer to taking out the highs of the previous month or the lows, right? And if you look at the other broader averages, it was pretty much just the NASDAQ. The other ones, I mean, the Dow was up for a while today, you know, I mean, so, but it was all these big cap tackers setting up with these big shooters close to taking out the lows. So if that was not going to occur, the last 2 days, we were still an inside week in the Qs. A lot of things were still inside week. Today, everything started to go. And so it's kind of a waterfall effect when I call it a simultaneous break. And I've talked to Dan about building us a scoreboard because I can tell you where the market's going without looking at a chart just by scanning. How many 2s are in the same direction and how many failed 2s are going 3 with continuity, because that's how the market's going to trade. So if you had a scoreboard and you said, look, like today, if you had the NASDAQ up there and said, how many are 2 down on the month, you'd have seen that number steadily grow across the day, right? That would tell you that we're probably going out on the lows.
That makes sense. All right, that's INVAX, definitely looking a little waterfally into the rest of, maybe the quarter. SPCE is the next one. We also have a 2 down on this one as well. Pretty much the same thought process here. I noticed that we don't have a 2 up on this.
Oh, it's a 3. Yes, and this is what we look for as well, because we know on a shorter term time frame, a 3 is a broadening formation because it took out both sides. We also know that broadening formations get bigger, thus the name. Therefore, when we have that 2 up and 2 down, we're looking to take out the bottom of that 3, unless we get a reversal against us, right? So one of the good things about this is it helps you to gauge magnitude, right? And knowing strat signals will keep you in longer, where a lot of people don't know how to gauge magnitude. And they say, well, I'm just going to piece out of this, or what I'm going to do, or, here it is. But we know what reversals look like, and you have all them scans in TrendSpider and say, if you don't have a reversal against you, the trade's still good, period. And, on a swing trade, that can be as much as a weekly time frame, up to there, or you can tighten it up to a daily if you want. But if it's still good, it's still good. And that's a really important part of trading, is staying in your winners as long as you possibly can, and hopefully being able to add to them.
Makes sense. So on SPC on the monthly, what we're really looking for is that break of this 3 low here around 23, 22-ish.
That would be nice, yes. So far, so good.
So far, so good. All right, that's SPCE. So on the strat side of things, on the monthly, we're looking for a breakdown through around 23, 22.98. Baba is one that is definitely having trouble here. Another 2 down in the making. Now we have a 1 here. Last time we had a 3. Same type of thing though. We're looking for that break of the 1 here around 220.
Yes. And so we call this a rev strat, the reversal strategy, because we have a bunch of different reversals like 2-2s, but a rev strat is reversing an inside bar equilibrium, right? So you had a 1, but it wasn't strong enough to take out the highs or the lows, right? That's an equilibrium. Nobody's winning. Now you might have a color, right? Some continuity in there, but you still couldn't do it. So then they tried to break the equilibrium to the upside, but failed, right? It's kind of like a tug of war, where it's like, all right, going one way, and I was like, oh, now we're starting to lose. Once that flag crosses the center line, right? That's what's happening here. So then we can look for that 2 up, 2 down to be outside of that 1, right? And hopefully go all the way to the previous 2. There, right. Hopefully we take that all out and become an outside bar.
Wow. That'd be quite the move. But I mean, honestly, the market's looking weak. And I know this doesn't have anything to do with price action. Do you think the market is kind of already priced in a lot of this vaccine and opening news, and it's just responding to the fact that there's really not any more news to stimulate any type of upside for now?
Yeah, overall, they're starting to come back continue to come into these opening stocks. Some airlines are heating up and all this kind of stuff. So some of those are blown out, like some of the restaurants have already gone to new highs and all that kind of stuff. But now you got cruise ships and airlines and people trying to realize, what is this world going to look like? Texas is wide open, Mississippi wide open. And, is everybody going to still stay home? For a while, we were convinced that, well, everybody's home. Why would they ever come back to an office? Well, we don't know, right? So you saw stuff like Zoom just get destroyed. So we'll just have to play it as we see it, really, and say, I'm always confused.
That's what I love about the strat. You just let the price action tell you what's going on. Yeah, no, Zoom, everybody was so euphoric about that earnings, and we have seen nothing but just red. So
Arn is right. That's a 1-2-2 down month too, after going 3 on the week and a 3-day yesterday and a 3-2 down today.
Weekly. Yeah. Woo. Down she goes. Already taken out this previous 2 as well. So
there's your 3. And if you go to that monthly, you'll see it's a 1-2-2. There's your rev strat down.
So you're looking for the break of the 3 here.
Yeah.
Got it. Love it. All right. So we went over Baba. Next is GRPN. Let's look at some green finally. Talk about just an absolute rip to the upside. What are we looking for on this side of things?
Okay. So if you can get as much information on this here, as much data on here, going back in time. So you'll notice that big dump, right? And now it's coming back to it. So if you go way back in time, this was over $600. So we like to call these used to be somebody's, right? This used to be somebody, right? And now it's coming back. And we've seen a lot of these out of the ashers come back. And so that's why that's there. It's a 2-2 directional in the month, which is not my favorite signal, but it also on the dailies rocketed right out the chute. And so that tells me we got aggressive buyers. And since it's been a lot higher, you can notice how once it breaks that big red candle there, how all that noise there is a whole big series of pivots, right? Yep. All the way up top, when you blow it out again, if you go back in time, you see how there's a whole bunch of like series of highs going back. Yep. We call it the pivot machine gun, because when you come back through a previous range, which is what you want to do, you don't want to go directly into highs or lows. You want to come back through a previous range, because what that tells me is people are going to be stopped against where they got in and well-known pivots, right? We know people are taught that. And so you don't always see it on a monthly basis, but We certainly use that on all charts, because when you come back through a previous range, right, and you have full time frame continuity, which means everything's trading higher than it opened on a month, week, day, and 60. Once you come back through that range, you're going to trigger stops. And so if you have algorithmic activity in there and they're trying to buy, the stops are removing liquidity. They're not able to get the stock. So it rockets it faster, right, as the liquidity gets removed. So that's something that we look for. Also strengthen a weak market to start off. And like I said, that big day on Monday, and then it was inside day to the upside 212 continuation today while the market was all jittery. So that's something we definitely look for. So I don't have a specific target on this. We just stick with it until it doesn't work. But at this point, you'd have a hard time turning this into anything but a 2 up on the month.
Makes sense to me. At this point, it is quite the month. We started around 44, we're at 61. So definitely one of the stronger ones out of the bunch across the whole market. Last one is DDD. This one had a really strong last few months, but we are seeing quite the reversal here. Kind of reminds me of Invax here with this to you, and then just breaking that completely down.
Right, and that huge bar. And then if you want to go again, just like NVAX, go to the weekly. All right. Oh yeah, thanks for playing. Already in.
Same exact thing, literally identical. That is nuts.
Right, and so that also tells us to watch SSYS, which gapped down and did the 2-2 today, because they trade similarly. So we were expecting something like that too, and are hoping for it anyway.
Absolutely. Now, on the monthly side of things for Triple D, do we have a broadening formation to look at on this one? I feel like I kind of saw one. Would it be this right here?
It's way back. It's a giant monthly. It also used to be somebody, but it's a giant month. So from here, even from here, you can see it. You can go back to that previous 2 up high. There you go. And so you can just draw off the lows. You can just draw off the, something like that, and then go off those recent lows. Not that one. Up. Oh, that'll work too. That'll work too. Like, the important thing about trying to draw broadening formations is that it doesn't have to look like a broadening formation. What you're doing is you're connecting 2 points that if this was, say, a 5-month chart or whatever, those last 5 months would be an outside bar of everything before it. That's all you're doing, is identifying outside bars that are not being presented to you by the software, and which would be an outside bar if you could alter any time frame on your software.
Which we will be able to. We're definitely going to add some more time frames. I know you guys love looking at the yearlies and quarterlies too, right? You guys like the quarterly charts?
Yeah. So once a month, I make a macro video. I made it over the weekend, giving these exact signals on a yearly basis and on a quarterly basis. And one of the little guys that people have liked is a 2-2 reversal year in Ford Motor. So people have liked the little Ford Motor coming out of the ashes with the yearly signal, because that's good all year.
Yeah, well, I love it. Well, I think we are right at timing here for what we have time allotted, but we got a lot of information here in the last 15, 16 minutes. So Rob Smith, founder, creator of TheStrat. He is the Strat master. He's gained quite a following on Twitter, teaching this to everybody. And really, Rob, thank you so much for joining us, showing us a couple of different ways to look at the market on the monthly side. And this may open up some people's eyes about looking at the monthly chart, because a lot of people look at the monthly chart at the end of the month. But at that point, it's already at the end of the month. So this really kind of opens up my eyes too at looking at these monthly setups while they're still very much in force. So Rob, thank you so much for coming on and going over these charts. And let's move on to the next segment.
All right. Thanks for having me, Jake.
Hey, you're welcome. Alrighty, let's look at some chart requests. There's definitely been some names that have been a common theme across FinTwit, which is likely why they got hit so hard over the last couple weeks. PLTR is one to start with. I'm not sure I know anybody who doesn't own this stock, or at least didn't own it until Friday. Friday was just an absolute massacre of stop losses here. I mean, look at this wick. I mean, this thing went all the way down to $20.18, and somehow we closed almost at 24. To me, the fact that we didn't even have the same volume as Thursday, and we had this much of a move down, tells me that this was likely a stop loss event. One thing to keep in mind, we do have multiple gaps above on PLTR. We have a very small gap above around 27.50. Then we also have another gap above around 30 to 31.30 or so. These have been hit absolutely ridiculously hard. If you look at the highs that Fubo put in, or excuse me, PLTR, we'll look at Fubo here in a second. PLTR from the highs all the way down to this low is down 48% in 3 weeks and 4 days. So less than a month, this is down 48%. I mean, this thing has been absolutely hammered. And so the question becomes, this thing got hammered over the last month. If the market does start to recover, is this going to be something that does recover quicker than maybe some of the other stocks out there? The one thing I want to point out here on the daily side of things, notice that we've had 8 red volume bars in a row. This has never happened in the lifetime of PLTR yet. And generally, when you do have this many candle red days in a row, you generally have a pretty big move to the upside. Now, that doesn't mean that we move to the upside. We could easily open in this wick and continue and possibly even test this wick low again next week. However, it is important to note that we now have 5 red weeks in a row, and that is just something that is pretty fascinating to see. We do have this solid candle here, so this fact that it's gray means that we did close above last week's close, which is pretty remarkable considering the last week and a half in the markets. So we did close above last week's low, but we did close lower than we opened. So that's where this solid candle comes in. And the gray color tells us that we did close higher than the previous candle. So a pretty strong hammer here right at this IPO anchored VWAP. This is a pretty strong setup. I mean, anything can happen in the market, but this has been absolutely annihilated. You know, if you're just looking at the fibs and you wanted to get an idea of just the measured move that we've had, let's look at the 50% level here. You know, that would put us around $32, and that would still be way low compared to what we hit highs of in late January. So we'll have to see what happens here. It's been beaten down. Will it be one that kind of goes to the upside pretty quickly once the market finally catches some type of bid that lasts more than a day? You know, the markets were up big on Friday, but you know, you really need to see a lot more than just one day of price action to really prove that this is a bigger move and possible reversal to the upside. So PLTR, this wick tells me that, you know, this wick kind of tells the whole story here. So we'll have to see what happens next week, but a pretty strong weekly candle here. Fubo, another one that's been absolutely annihilated. Another one that I don't know of anybody who hasn't owned this stock at some point in the last 4 weeks or still owns it. So in this case, you can see here, if I anchor the volume by price from the lows in September of 2020, the volume gap and the volume shelf did exactly what they were supposed to in the last week. You can see here that we initially moved down to this volume shelf around $35. In late February, we did kind of bounce around and actually bounce off of this area and moved right up to this next volume shelf here around 43 into earnings, and then got crushed after earnings. So you can really see the volume shelf doing exactly what it's supposed to do. We had this volume gap above. Price was able to move up very quickly through this gap in liquidity up to 43. Then as we started breaking down, we moved down through this gap below to around 27, 28, which was where our next volume shelf was. And this is exactly where supply started to dry up, and we got a bounce the last 2 days of the week. So just a really good case study on using the volume by price. The reason why we anchored the volume by price here is this is really our capitulation point before the big reversal to the upside. So this is where we would say the market really reset. And so that's where we want to see, you know, measure that volume from that point in time. Beautiful bounce off this volume shelf so far. We'll have to see what next week holds. The weekly side of things, if we anchor a VWAP from that same point from September of 2020, you'll see that the price has never really respected the anchored VWAP that well. you always undercut it quite a bit. So you can see here in December, we undercut it. This week, we undercut it. This is where I probably would put in an offset. So I'd go right click, go to properties here. I would go to percentage. Let's do, oh my gosh, I can't even, we may not even have a big enough percentage offset for this. Let's just do -9. I think that's the most we can do on this. It's gonna be interesting. All right, apply. Yeah, it's not even close. So the point is, you can see that there is a lot of volatility around this area. The price does not respect this anchored VWAP perfectly. It hasn't at any time. So this is more of almost a line of best fit here rather than an area where the price should hold. But you can see that there's been multiple times where the price has pretty much traded, probably since this is a 9% offset, I would say the price has been able to drop over 20% from this anchored VWAP and still reverse from this point. So we've had now 4 red weeks in a row, relatively low volume considering the selling, the volume that we had to the buy side, to the upside when the price was going up. So the fact that these are pretty lower volume bars to the downside compared to what the volume that brought the price up tells me that, you know, this may be even near reversal as well. The problem is, just like PLTR, everybody on FinTwit, as well as their extended family, is in all of these stocks, which is a problem. This creates an overcrowded trade, and if everybody's already in the trade, you have no more demand to push the price up. So you have to have all of these people capitulate, stop out, and then the price can reset from there. And that's what I think we're seeing over the last couple of days and maybe into the week ahead. Next one is Amazon. This is a pretty generic one, but Amazon is one that did exactly what the textbook said to do. We have this March capitulation on the weekly side, the anchored VWAP from this point. And you can see we missed this anchored VWAP below by about $40. And this is exactly where you go in and you create a sensitivity alert, and you would have been able to be alerted when the price got anywhere within this purple area. So definitely use the sensitivity alerts. It allows you to get these alerts around zones rather than an exact price point. So weekly side, pretty textbook bounce. 4 red weeks in a row here on Amazon. That doesn't happen very often. We didn't even see that in the COVID drop. So keep that in mind going into the week ahead. This may be overextended to the downside. And then on the weekly side, or on the daily side of things, we do have this gap snake, which is showing we do have a gap below. So it's always important to look at multiple views, not just one view. Yes, we're 4 weeks down. That's definitely maybe an overextension on the selling side of things, but we still have this gap below around 2,600. So, you know, if we anchored the volume by price, even let's say from this high that we saw in September, we could move very quickly all the way back up to this volume shelf above around 3,100. But then the price could easily turn here because everybody is now holding at a loss, is going to be back to break even around 3,200. And then people may start selling again, adding to the supply, and that may help the price reverse from there. So if this did move to the upside, let's anchor a VWAP from this high here, and you'll see it's pretty much right in line with this 3,200 area. So if we did bounce really hard next week and get some type of dead cat bounce, at least we call it dead cat bounce for now until it proves itself anymore, you know, this 3,200 area would be definitely the area to break to the upside. SE, this is one that took quite a hit over the last few days as well. But, you know, it's still very much in an uptrend. I anchored the VWAP from the November lows here. If we turn off the gap snake, you can see that the price has really respected this anchored VWAP here with the percentage offset. Notice I add a percentage offset because just like Fubo, there's multiple times where the price is breaking down through this anchored VWAP, and it's actually pretty consistent. When the price breaks down, it's generally about, what is this offset? About 4%. So anytime the price breaks down through this offset, it's generally about 4% below that anchored VWAP. You can see it here back in mid-November. You can see it here again in late December. Then you can see it here on Friday where we penetrated below it as well to around 209, 210. So all in all, this is still very much in an uptrend, pretty solid candle here on Friday. On the weekly side of things here, you can see that we're kind of at the lower part of this very slight broadening channel here. And we did bounce exactly where we needed to. So if you are playing SE and you're playing this particular setup, maybe just create an alert on both sides. You say, TrendSpider, alert me when the price breaks down below this area. Alert me. Let's say we keep this alert active for 30 days. You create an alert on the downside. You create an alert on the upside. And then you're not stuck getting chopped up within this area. You just trade the breakdown or the breakout, and you go from there. So this is how you would do that. Put this at 30-day expiration as well. And now you technically wouldn't even need to watch this chart anymore. You would just have to know, okay, if the price breaks down through this support zone, maybe it's time to go short. If the price breaks to the upside, maybe it's time to go long, if that's the type of trader you are. Some people want to trade inside this area, but it becomes a lot less unpredictable within this zone. There's so many different ways price action can go. It's a lot, at least sticking to some type of process when you're only trading through breakouts or breakdowns. But everyone has their own style. No style is wrong or right. It's up to the individual trader. But this would be one way to trade if you're just trading the breakout or the breakdown. Next one is SKLZ. This is the last one that we're going to go over. SKLZ did exactly what it needed to do this week. You can see that it held right at this volume shelf. If we anchored the volume by price from this reversal, you can see that the volume shelf literally got undercut, but a lot of the time it does. If we anchor a VWAP from that same point, you can see that we are moving right up to this anchored VWAP. This is actually acting as a level of interest for sellers now, or at least where maybe people are coming onto the market and adding to supply since they're back to break even and they're selling off. But all in all, 4 red days in a row, down from 36 all the way down to 24. That is quite a move down. We'll have to see what happens into the week ahead. On the weekly side of things, you can see that the anchored VWAP has held. It bounced here from this October 2020 low. This reversal is the same thing, but you can see here it's a slightly different. So all in all, the anchored VWAP has held multiple times here. So let me turn off one of these, because you can see this one's a little different than this one. So, okay, so this one here, you'll see that, the price has held this area multiple times. 1, 2, 3, 4, 5. This is the 8th time, if we count this one as well, that price has really held this area. So this is an important level to hold. We'll see if this holds going into the week ahead. We are trading right at this volume shelf as well. If we anchor the volume by price from here, that's where a majority of shares are holding, right around 28, 29. So this was a little longer of a chart request. I really wanted to get in detail with some of these charts because it was a wild week, and wanted to just explain some of the ways that you can use TrendSpider to take advantage of some of this price action. Alerts, anchored volume by price, anchored VWAP. Raindrops probably weren't a great tool to use this week, just because generally, at least for me, I like to use raindrops more to the upside. However, if we look at this area right here, we saw this wick and we turn on the raindrop chart, we would have been able to see that there wasn't a lot of volume supporting price up here, which would have told us that this probably was not the strongest candle on March 2nd. So there's a lot of different candles and different features you can use on the platform to get an edge in the market. So if you do have any questions using the platform, just let us know and we're happy to answer those questions. We do have a 7-day free trial. So if you have an itch to try this out and just see if it works for your style of trading, we do have that 7-day free trial so you can try it out before you buy. And really, thank you everybody for watching tonight's episode. And we will see you next week with some new guests. And everybody have a great trading week ahead.